Let's get more on President Trump's attacks against Jerome Powell. In a post on Truth Social, the president called the Fed chair Mr. Too Late and a quote-unquote major loser, saying that, quote, there can almost be no inflation, and calling on him to lower interest rates. For more on what it could mean for Powell's future and the independence of the Fed, former Cleveland Fed President Loretta Mester joins us now. She's also a CNBC contributor. Loretta, great to have you. Great to get your perspective on this. I mean, nobody in the economic world says that this is a good thing, and certainly we're seeing in the reaction to the markets. But in terms of what this could lead to, I mean, we get a flavor of it in terms of the bond, what we're seeing in the bond market in terms of the dollar. Is it too much of a leap to say that we would be on the path to becoming Turkey? I know there's a difference because they had 4 central bankers in 2 years, but this is the United States of America, the world's reserve currency, the world's safe haven in terms of the treasury market, and we're acting like this.
Yeah. Well, I think the president's, comments on firing Jay Powell and before his term is over certainly aren't helping in terms of clearing up any uncertainty. It's adding uncertainty on top of uncertainty that we had with the tariffs. So it's not helpful for the economy, and you see the reaction in the financial markets, as you just pointed out. But it's also not helpful for the president's own legacy, and I have to believe that at some point he'll understand that, his advisors will tell him that, and that he can sort of complain about policy but not threaten to do things that really upend the institution and the institutional underpinnings of the Fed, because everyone who's ever researched this, if you look at other countries, you really want to have a Fed or a central bank that is setting monetary policy that is really focused on the goals that their legislator has given them, and in the Fed case, it's the congressional. Congress has given them its goals. So you really want that to be the focus. And I am 100% confident that Jay and the Fed are going to look past and look through all this, what the president is doing in terms of saying he wants to fire, and really stick to the minuting of promoting price stability and maximum employment. That's their job. That's what they do. That's what they work hard to do, and that's really what their focus is going to be. And all this other stuff is adding a lot of uncertainty to the economic outlook, which makes their job harder. But I also think that it's undermining the president's own economic agenda and his own credibility in terms of his economic agenda. And at some point, I think that'll be realized by the administration, and they'll understand that this kind of attack on Powell is not helpful in any case to any agenda. And so I think that is where it's going to be. But in terms of what the Fed is going to do and what Jay's going to do leading the Fed, they're going to stick to their job. And their job is to take into account what's going on in the economy. And that includes what's happening in financial markets, of course, but also the bigger picture in terms of what's coming in terms of policy, and really focus in on what's the right monetary policy settings to make sure that we have inflation coming back down to 2%. And we have, as much as they can do with an interest rate tool, cushion this big, pretty traumatic change in the regime, right? So this isn't just a little bit like we're going to have some cyclical stuff going on. It's really a fundamental change in the trade policy and the way the U.S. trade policy interacts with the global trade system. So the Fed has some tools that it might be able to cushion against some of that. But right now, it's trying to balance both of those goals. And that's what they're going to be focused on. They're not going to let this stuff distract them from their really important mission.